Welcome back to the trade setup. Today is March 6th, 2022. I'm going to go over a couple topics first and then we'll dive into the charts. As always, Trade Setup is not a registered security broker, investment advisor, or financial advisor registered with the US SEC. Okay, so pretty eventful last week. When I show you the charts, it'll kind of make sense. We really didn't do much. We had a lot of chop, pretty much Monday through Friday. And as far as the analysis is concerned on the charts, I don't see anything drastically different in a way uh, from a point of view of structuring trades than the previous week. So I'll go over that in the charts. We'll take a look at where are the good opportunities. Overall, I am still bearish in this market. So far, the charts are pointing bearish. The overall market sentiment is pointing bearish, and we're getting a lot more economic indicators that are kind of pointing towards recession. And then I talked about this in the beginning of January that it's going to be a tough year. But so far unfortunately it's like following that trend. Fortunately, we were kind of prepared ahead of time if you paid attention to the commentary. So what's happening right now, January, February, and even like beginning of March, should come as no surprise to anybody at the trade setup. So, you know, very important to kind of distill down all the external factors into some sort of a reasonable thesis. And that's pretty much what we did in January. Put together all the data points, collected them, see exactly what they're kind of telling us, and everything was pointing towards a potential drawback on the market. And so that's what we're seeing right now. Okay, so let's start with the economic calendar. First thing on Wednesday, we're going to see job openings in January. Um, this is going to be it's going to be important, but I don't think it's going to be as important as the core CPI data on Thursday. The core CPI data is going to kind of give us an indication on inflation, which has been like the center story of all the news headlines, as well as the Russia and Ukraine conflict. Okay, so let's see how the core CPI data month over month for February shows, um, and whether the Fed is going to make any adjustments to their current narrative based on the new data point that we see. U.S. oil, if you haven't been to the gas station, in some places it's about $4 USD per gallon. Okay, so U.S. oil has skyrocketed, and historically we've seen oil as precursor to a precursor indicator uh, for recession coming up. I'm not fear mongering. It's just historical data has proven that typically when oil prices kind of get out of hand, it's a general indicator of recession coming, um, because everything is inflated, food, energy, and now gas. So just to kind of be aware of that. Okay. All right, so let's dive into the charts. This week, let's start with the SPX. These are very old and very standard levels that every trade setup member has. These are macro levels, meaning the analysis was done on a bigger time frame, daily or weekly, and the levels were plotted out. So far, they've respected the levels very nicely. So kind of use them to give us an idea of whether we're bullish or bearish for a particular ticker. So this week, let's start with SPX. On Monday, we kind of moved up. I had a pretty much a non-existent day. It kind of traded inside Friday's range. Tuesday, we fell back down. We tested that 4280 level. Uh, Wednesday, we went back up, couldn't breach the 4400 level. Tried to get above it, but ultimately failed. And then that failure resulted in more sellers stepping in, creating a lot more sell orders and driving the index down. And then Friday, we we started going down low uh, from 43, 45, tested the 4280 range, and then bounced later in the day, and then kind of closed around here in the 43.24 range. Okay, so overall, the price movement respects the macro levels. So I highly encourage you to, take a minute if you have not done so to mark these levels. Um, these are typically what I refer to every week, and they will not change. Okay, they will not change for the very reason you see here is because they respect these levels time and time again. So this week, what are we looking for? Well, we pretty much had a sideways week, right? Like didn't get above 4400. We didn't break below 4280. And so the same story kind of holds true. If 4280 breaks this week, puts under can work. And then if we break above the 4400 range, then calls can work. Bear in mind that there is a bigger downtrend line on the daily chart with 1, 2, 3 touches. And so if you are going bullish above 4400, not much room to move up here, right? Before you're going to see more sellers step in. So as far as the upside is concerned, I think the best and the safest way to kind of take an entry on the upside is wait for this downtrend to break. If we can maybe consolidate one more week and then break the 4400 level, the following week, uh, move up, come back down, retest this downtrend from the top. Right here is where an ideal area of entry would be is in this particular area on the retest or back test of this downtrend if we're looking to go bullish. But as of right now, again, all eyes are on this 4280 level, um, including our group. We have seen a lot of buyers step up and hold this price level, minus this particular instant where we got surprising news of Russia invading Ukraine that led to a lot of fear in the market and ultimately had a major gap down the following day. And so, again, the the line in the sand is 42.8025. If SPX starts closing below this, yeah, we could ultimately see 4200, 4116 before more buyers show up. Okay, so uh, I think the best scenario to play out is to confirm a bottom. So we try to confirm this bottom right here in the past when the price came back down here, and it ultimately failed because of Russia-Ukraine conflict. And so we created a brand new lower low. Now, is this the bottom? Well, the best way to confirm is to perhaps test it one more time and see if the buyers show up and hold this level, effectively making a double bottom or a W. Right, so if this happens, I would wait for that break of the neckline at that point. This would be the neckline, which is also the 4400 level, right? So you have your W right here, 1, 2, comes back down one more time, retest this level, breaks above. This is your neckline. You wait for that break. Wait for the break. You could wait for that retest. Lots of ways to play this. So think the best case scenario, if we want to go bullish, is to confirm that there's a bottom. Until then, it's pretty much guesswork. Assuming that there's a bottom, this is the bottom. I say wait for the candles to give you the full story, whether the bottom is in or not. So as of right now, I don't think the bottom's in. Um, but I would like to see confirmation that perhaps a 4100 could be the bottom. And if that fails, you're going towards 4,000, potentially even 3,800, based on some of the other technicals that are playing out. Okay, so this week, puts below 4280. Um, calls above 4,400 can work, but you're not, it's not really great risk to reward on the upside. So watch SPX on the lower end. Okay, so now I'm gonna kind of fly through this now that we talked about the major index. Let's talk about SPY. Pretty much the same story. Uh, SPY kind of moves in a very similar fashion as to SPX. So if you're trading SPY instead of SPX, it's completely okay. Basically, keep an eye on this particular zone where buyers have stepped up repeatedly, right? This is the same area that we're trying to hold on SPX, which is complementary to SPY. So if this area can hold, could see more bounces, but should it fail, there's a great risk to reward on the put side towards 400 level again. Okay, so puts below, I'd say probably 428 would be ideal. We want to see a daily close below here, right? Not a quick breach and entry. I want to see a daily close, and if we could see a daily close, a strong daily close below this, then we could have 2-3 days of downside following that daily close below this buyer level. I'm sorry, demand zone. Okay, QQQ. Q. All right. So same story. We've had buyers step up into this demand area previously, minus this particular news-dependent drop. Again, Friday we had buyers step up again in this particular range. So this week, watch to see if 338 holds. So if 338 breaks, and when I mean breaks, I don't mean this. This is not really a clean break. We're just going down and then buyers stepping up. We want to see a close, right? There are buyers sitting here. We want that demand to diminish. So all the demand has to dry out here. And if it dries out, then puts below can work. So keep an eye on 338 this week. If it can close on the daily below there, puts can work. You can catch, 5-6 points to the downside pretty easily. For the upside, I'd wait for 348 to break, even 350 psychological mark, which is kind of this top of this candle, right here, 350.09. This is on a chart. You can, if you draw this trend, it's basically lower lows and lower highs forming. So if it can break above this lower high at 350, then I'd be a little bit more bullish and I could take on calls. So above 350 calls can work. Below 338 puts can work. Okay. Let's look at Apple. Apple is, I use Apple as an indicator for understanding the strength of tech. Typically, Apple's been a little more resilient than most other companies. And that's basically because most companies that have been resilient have a really strong balance sheet. So cash reserve is very high. They're situated and for the long haul. So any sort of near-term bearish catalyst, any company that has a strong balance sheet and cash reserve can easily ride that out. And so when we're talking about safety in an uncertain market, investors and traders tend to mainly smart money and investors tend to relocate their assets into safer companies, Apple being one of them. Right now people are diving into gold. I personally don't really see that as a safe haven, but it's happening, and then a lot of bonds and um, energy stocks, even to a degree, a little bit of financials, right? Even though financials are not doing great, they tend to be a little more resilient than these growth companies that have weak balance sheets. So um, a quick explanation of on why Apple is kind of holding its ground versus other stocks. But this week, watch 162.23. If it breaks below, puts can work towards 160. Below 160, we could easily test 157, 155. So the best possible trade for the put side is actually below 160.42. So best setup is here. Below 162.23, there is a quick trade. But again, if you're risk adverse and you want to take a very safe put play, I'd wait for 160.42 to break to consider puts on Apple. Below that, there's not really much. You could catch easily 3 points to the downside. Um, and then below 157, you could catch 155. So worth a shot there. And then I'd pretty much wait for 170. 167.82 does look like the higher low here. Um, sorry, lower high. The lower high, and then so I'd pretty much just wait for this 170 to break, right? So keep an eye on 170. There's no need to load up on calls, just because so far the trend is down, more red candles than green. There's no need to go against the grain and take unnecessary risk. Okay, so let's look at AMD next. So AMD so far, downtrend, right? Clear downtrend. What we want to look at is the 107 level this week. If it breaks, easy put play towards 103, 100 before we see buyers step in here. So keep an eye on AMD. I'd watch this 107 level. If it starts to break, puts below can work right here. Let's turn that red, signifying that we want to be bearish below that level. And so if we come back down into the 98 to 100 range, I'd consider a bounce play here for calls on AMD at near 98 100 range. Do I see anything towards the upside? Maybe. There is this drop base drop that formed right here. Here's your drop, there's your base, there's your drop. So clear supply zone right here. Above 118.90 calls can work. So if we start printing green candles here, okay, very likely if it bounces back, we're going to see a rejection here. Okay, so this is a major supply area. If the price moves back up from this level, most likely we're going to reject on the first touch. What we want to see is the price come in here and consolidate and hold this level, essentially taking out all the sellers, right? All the supply needs to be consumed by demand. The best way to observe that is to see if the price can hold and there's price acceptance inside the zone. Clear play for calls is just above 119, right? This 118.89, let's call it 119. Calls above this can work. So we want to see it push back. We want to see it consolidate inside this range and observe price acceptance, ultimately taking out the supply, and then break above 119, you can take calls. Okay. And then below 107.71, puts can work. Amazon. Similar setup here. Below 28.71.83, puts can work towards the downside. You can catch it down towards at least 27.92. For the upside, I'd wait for 3,000 area to break. Even then, I'd probably wait for 30.80 to break. Right here, clear area of resistance. You could see almost a week worth of price action, just unable to break above the 30.78 range. And so we've had a clear attempt and then a failure. So buyers try to pick it up, break above it, not enough showed up, and so ultimately they gave out and we had a massive sell-off. So this week, watch to see if a continuation occurs below 28.71. So puts can work below this and catch it all the way down to 27.92. At this point, I'd kind of wait and observe to see if we're going to get another bounce from here. And then for the top side, again, just wait for 30.80 to break. Next up, let's take a look at Google. This one, very interesting. Again, most of these stocks have a very similar pattern based on the way they move. Google, I'd consider calls above the 27.30 range. Watch this area. Consolidated, failed to break above. So this is technically the resistance we want to break above to consider calls. We do have a lot of drop. There's your base, another drop. There's another base, another drop. So plenty of supply zones on the way back up, right? You have a lot of supply zones on the way back up. That supply needs to be consumed by demand in order for the price to move higher. So if anytime you're considering calls in a down market, just try to locate the supply zones. And if you could locate the supply zone, you'll know ahead of time exactly where the price might hit resistance area or might have trouble moving higher. So keep an eye on this particular area. At this point, I basically would want to watch to see if the supply zone can be taken out to have the price rally higher. This week, watch 26.23. I think puts below here can work. If you want to be really safe, I'd wait for the break of 2600. It's a psychological mark. Kind of held that level on Friday. So below 2600, puts can work towards the downside, towards 2560, even 2500. Okay, so puts below 2600 is the preferable trade here. Even if the price moves from here back up to here, I would not consider calls on the first touch. I'd wait for consolidation again and then see if it can break higher after setting up nicely. So I do like this setup here, puts below 26.23 on Google. Let's look at Goldman Sachs. Goldman Sachs is in a very interesting spot. We're pretty much in an area where we can either consider calls or puts from the level here. And before I overlay our levels, you can see clear as day, a potential double bottom forming. Now, when I say potential, I don't really know, right? This is a hypothetical scenario where we could potentially move higher from here. And the best thing to do is wait for this neckline to break, right? Wait for 35.79.75 to break and consider calls on the top side. Or, we're saying this downtrend continues. We're effectively just making we're about to make another lower low, and this was the lower high. So watch to see if we break new lows. Below 323.72, puts can work towards the downside. So I would consider puts or calls at this particular price range, watching price action and market sentiment, right? So we could get, if the market starts to rally on Monday, easy to play calls towards the upside on this one. But if we see more bearish sentiment, then consider calls, puts below 323 for another lower low. Okay, so let's overlay the levels, just right here. So now we are taking this level, kind of keeping an eye on it, right? So below this 326, we could easily see 320. So catch 6 points to the downside if this level fails on the daily chart. NVIDIA, um, NVIDIA tends to have these massive runs and then just really strong pullbacks. This week, so for NVIDIA, it's been a very difficult trade. So NVIDIA tends to move higher in the day and then pulls back. So it's harder to hold any sort of intraday options, even calls or even puts for that matter. Um, this week, for NVIDIA, I'd take it. I'd take it below 223, right? So watch to see if 223 can hold. Um, it closed around 230. Technically, we want to see 220 hold, but I'd start keeping an eye basically down here, right? So I'm more interested this week to see if this can hold here, right? So I'm watching this particular level, rally-based rally. There's a wick here, a basic close here. So I'm watching 223 this week to consider puts. Not a whole lot as far as downside is concerned. Um, yeah, I think there are better setups this week than Nvidia. Just I'd stay away from it. But I'm gonna watch this level just to see how price reacts. Can we form a a reversal setup here, right? That's basically all I want to see here. It's not really like a level that I'm paying attention to, but more so I want to see if there's some sort of price action, constructive price action that can give indications towards a pushback towards this 243 level. So I'll keep an eye on this. I don't really see many, maybe a quick trade here, which I will call out in the Discord. But nothing to write down and play along as of right now. So let's look at Tesla. Tesla's been it's been an interesting one, right? So it's been a fun stock to trade. We've caught all this. We haven't caught most of this towards the downside. Um, so Tesla's been holding strong just because, well, I believe oil prices are going high, and then the the standard thought is, well, if oil prices are going up, that means gas prices are going high. That means it costs more to fill a tank. And so the logical thing for people to do is move away from combustion engines and move into electric cars. Tesla is the leader, and so Tesla benefits, right? So that's the logical conclusion that the most common common thought comes into. Um, does it, does it make sense? Doesn't have to make sense. If this is what the overall market or people think, and that's how the price is moving, that's pretty much all we kind of care about. So this week, Tesla, um, I'd watch the 838 level again. So see if I'm sorry, 823 level. So 828, 823, this particular area, watch to see if it fails, right? If this fails this week, puts below can work. And I'd wait to take puts below this level down to at least 800. And then if it starts failing 800 level, I'd expect a bounce in this area just to especially on the first touch, I'll expect a bounce right here on the 785. So calls can work right here. So puts below here, down towards 800. Then I'd wait to see if 785 holds, and then there's a bounce here, quick bounce. if it retests a second time, so let's say this scenario plays out, right? We get the bounce, we come back down here one more time. If it breaks the second, if it comes back down and fails to hold on that second touch, I would hit puts again towards 750, even 700, right? So I'd take this thing all the way down. But if you're playing puts this week below 728, 828 trigger, consider an exit towards 800, wait for the bounce, and then if it rejects, comes back down, retest that 785 level and fails, I'd re-enter puts there. Okay, so don't like best not to just buy puts and hold it, because options are decaying and time dependent, so you have to take each leg of the move independently. Unless you buy time, right? So you can't do this you can't just hold indefinitely unless you're buying time on your options. If you're trading weeklies, then timing and entry are very important. Okay. That's pretty much all I have for this week. So just a few comments, I guess, with some questions I got. You know, be it's if you just started trading, this is a very tough market. You basically you dived into the deep end, uh, and if you don't know how to swim, this is this is gonna feel like you're drowning, right? So not the best trading environment for a new trader, and definitely not the best trading environment for copy trading. Okay, so if you're waiting for alerts to come out, it doesn't matter who you're waiting for. You can follow anybody on FinTwit and Instagram and TikTok. If your goal is to basically wait for somebody to tell you, hey, I'm buying calls, so you can buy calls, um, that type of trading is not going to work in this environment because the volatility in the price is very high right now, right? And then the directions of the actual movement, it's a lot of intraday reversals. So, um, there's no clear direction every week. We sometimes try to hold, we sometimes break down. Um, so my point is like try to understand the bigger picture. Try to see if you can understand, how these try to use these videos to kind of supplement your understanding of how price moves and what needs to happen if something happens, right? If this level breaks, should I consider puts? Does it make sense to consider puts? Okay, I'm considering puts because it broke this level. Where's my exit? Where's my stop loss? Like this type of active thinking is what's going to separate the winners from losers. Um, if you're looking for a call out service, I'd hold off until at least the summertime to copy trade. Okay, I'm not a big fan of promoting copy trading. I think it doesn't work in my opinion. It doesn't work. It'll work sometimes, but there are more times that it doesn't work. So it's better to kind of just learn the right way to trade and then use the information provided to you by really good traders to set up and structure trades for yourself, and then become a proficient trader. Okay. The other question that I wanted to address that I got is, I think it was basically talking about nerves. Uh, I how do you know when to get out? How do you know when to hold the position? And uh, I think most of it has to it comes down to experience, right? If you're, for example, like if we're trading Tesla and you put a stop loss, you put a cookie cutter stop loss. I think this is the best way to say it is you always have a cookie cutter stop loss of 10 or 15%. And let's say you come and trade Tesla. Well, that's going to prematurely stop out because Tesla can easily swing $10, $20 and then just move back in the direction it was originally going. So um, you have to understand the stock ticker you're trading and how it moves, right? So Microsoft moves in pennies. Amazon, Google, Tesla, they move in dollars. And so you have to adjust your strategy based on what you're trading. You can't, right? You can't use a cookie cutter strategy and risk management style for every stock that you trade. Each stock moves differently. Each stock has its own personality. The IV is different. So definitely take that into consideration when you're taking trades. Um, okay, and then finally, try to understand what you're trading, like what type of style you're trading. It's easy to get caught up in okay, I said buy calls above this trigger and puts below this trigger, and the moment the price crosses, you're like panicking, right? The emotions are high. Oh no, I'm gonna miss out. I'm gonna miss out. That's typically the first thought is that, oh, the price crossed. Should I get in? Should I get in? And um, that's the way I would think about it is take the trigger level as an area to watch, right? It's not a fixed buy as soon as it crosses. It's more so watch the 328 level. Watch the price action. Our bounces, for example, let's say we're watching this, okay? And we're considering puts. Well, come Monday, if it comes here and starts hitting this 828 level, it doesn't automatically mean you buy puts, okay? You don't just buy puts because a trigger level's crossed. What we want to see is productive price action towards our thesis. And what I mean by that is, well, okay, let's say the price came down, okay, on a lower time frame. Well, does it come here because it's a level? Does it bounce? Okay, number one, does it bounce? Well, if it bounced, is the bounce strong or weak? Meaning, does it get back? Does it get back higher than it came down from? So if you're looking at an opening price, right? Monday morning, let's say price opens at 8:30, 8:30, right? Comes down to 8:28. If it bounces and closes and starts moving above the opening, I'm sorry, the close of Friday, then that's a sign of a pretty decent bounce. Like it's a strong bounce. So for you to consider puts on the first trigger, it doesn't make sense, right? The analysis is done on a daily time frame. That means in order to consider puts, you need to be very, very sure that there's not buyers holding this area up. You have to wait for the buyers to go away. And the best way to look at it as far as candles are concerned is you want to look for weak bounces that keep getting hit here, okay? And each bounce needs to become weaker and weaker. What is that telling you effectively? That's telling you that every time the price comes into this level, the demand is drying out. You're getting weaker bounces. You're getting weaker bounces because there's less demand, right? Every time it comes back into that range, more orders are getting filled, and then there's not going to be any demand left, eventually causing the price to break down. And that's where you enter puts. Okay, you have to watch the price action. You have to see if there's bounces. Are the bounces getting weaker? Um, Alternatively, you could wait for the price to just breach and wait for a retest, right? So let's say it just breaks. Instead of watching this, and you don't have time to watch this, then wait for it to break, then come back and retest this area and reject, right? You want to see this area come back and reject, and I would enter on that retest. I would never ever buy on the first touch. Like just don't do it, right? If you're not watching the charts, If you're not watching the charts and if you don't know how to observe productive price action towards your thesis, uh, best to wait for these retest, backtest confirmation entries. Okay, so I hope that kind of answers your question, some of your questions. And then as far as scalping versus day trading, two very, very different strategies. What I set up here and what I kind of show you, it's meant for day trading. Okay, so if you want to scalp these, it's not going to work. It might work sometimes. Most of the times, it's not going to work because these levels, again, are picked out on a daily time frame. Okay, so when we're looking at levels on a daily and weekly time frame, they're pretty strong. Okay, these are not 5 or 1 minute levels, intraday levels. If you want to scalp, that's kind of where you need to go into. You need to start zooming in into smaller time frames and identifying support resistance intraday. If you're looking at daily and weekly levels and using these to scalp, it's not going to work. You're mixing two different strategies, and stick with one or the other. You got to stick with one or the other. So uh, try to kind of differentiate based on the type of trading you like to do and what you're good at. Like if you can't hold a position, maybe scalping is for you. And if you don't have time to babysit the position, maybe scalping is not for you, and you go to day trading. So it kind of depends on number one, your personality and your time commitment. So keep those two things in mind. And this is all of what I just said in the last like 5 to 10 minutes. It's pretty much the reason why copy trading doesn't work, because trading has to fit your schedule, your understanding, and the type of person and mentality you have, right? Because it's very emotionally driven. A lot of panic, a lot of excitement kind of sometimes helps you make money. Most of the time it makes you lose money. So depending on your persona, your time commitment, and your overall understanding of price movement, you should try to decide where you fit in on the type of trading style that will help you make the most money. Okay, so with that, that's all I have for today. If you like our content, please give us a follow on Option Setup on Twitter, Official Trade Setup on Instagram. If you like to join our community, check out thetradesetup.com. It'll give you 2 weeks free access to our Trade Setup Discord, where we do live. We'll call out trades. We'll provide algorithm levels, which is our bread and butter. And it helps all our members stay prepared ahead of time, no matter what the market condition is. And then if you like content, please smash that subscribe button on the YouTube for the Trade Setup handle. Thank you very much, and I wish you all the best this coming week. Thank you.